All right, so our offices are pretty much set, and then he's just gonna do the rest of the building right now. So it looks like next Saturday is that the 26th or 27th? What is that? 26th. Yeah, 26th. We'll have the open house. Hey, good afternoon, guys. Thanks for joining us this afternoon. We got really good information. I really appreciate you guys. Got another special offer coming up. So again, thank you all of you guys for checking us out. Let's give it a minute or two here for folks to get on. Where are you guys signing in from? We always want to know. We're always kind of curious what our reach is here. Anyone outside of the state of Texas right now? Anyone outside of Texas? Anyone outside of Houston? I'll have to kind of figure out where you guys are watching from. Hey, Bob. Yeah, so if you're outside of Texas, love to know where you're watching from, and if you're outside of Houston as well. And we're going to get started. The update is pretty phenomenal today. We just got a little bit of data from another market that we're super excited to see this data coming in, and I'm actually gonna let Jason say I told you so, because this one is pretty solid. So if you're outside of the state of Texas, if you're outside of Houston, just wondering where you guys are watching from. All right, let's get going, guys. We are, as always, let me do my disclaimer. This does not offer securities, even though we'll be talking about that today. You have to talk to Brian. We have a 506c crowd fund. So, we're allowed to advertise and we're allowed to talk to you guys about it. But we really want to direct you there. And then we can figure out, hey, if that works, if it doesn't work, we have a relationship. What else do we have? So there's a whole bunch of sorting that goes on with Brian. But it's painless. He's really good at his job. But we're not offering anything today. But if you talk to Brian, we can get you in and we can start showing some more details on our fund and some other stuff. Help us ring the bell. I see some guys are here from Facebook. By the end of this month, we'll probably be moving off of Facebook for our 12 p.m., our 12 noon updates. We'll still do some Facebook Lives, but we're trying to funnel it all through our YouTube channel. If you haven't subscribed yet to our YouTube channel, please do. Texas Real Estate Radio Network. Hit the subscribe button, and then you hit the little bell, and you'll get notifications. We appreciate that. We also started a Patreon account, so we're not doing winning more weekend classes. We're kind of done with that. The stuff that we have archived, we're going to make available to our Patreon members. And the nugget bombs that we would normally do on Saturday morning, they're going to be Patreon exclusive. So if you go to the Patreon account, /MRTXRE, I'll send you the membership right now. If you guys want to join, you're going to get some bonus content video. We got Jason going to be filming some things. Got early access to our YouTube content. You're going to see that we're shaping up more and more to be not so much just a Facebook Liver, but we're really moving into that YouTube space. So we're going to have good content. We're going to have bonus content. We're going to have hidden content. So you really want to sort of get involved with Patreon. And again, at that high level, the whopping $25 a month, you're actually going to be able to sit in on some of our planning sessions, like with Jason and I and Brian and Catherine. We all sit down and we're talking about the future. We're just going to light up a camera right there. And for our Patreon members at the platinum level, really sort of understand how we plan our business. We've been pretty open with everything we do. And we just want to give you some really good content. So the levels are $10, $15, and $25. Again, we're not doing classes anymore, but every month you'll get the equivalent to a $100 class online. So there's huge value there, plus all the insight, plus the direct Q&A. Again, so if you are followers and you like it, you've done to our Saturday classes, and you're looking for more information, it's $25 a month. It's really, really affordable, guys. So love for you guys to help us out there. We have a big announcement today. Jason is going to be doing an October property hunt. So let me explain what's going on, Mr. Texas Real Estate. We're getting our commercial building here, the Texas Real Estate Center open, the Texas Real Estate Center open. We got furniture moving around today. We got cleaners coming in. We got the last of it. We should have our CO before the end of the month. We got folks moving in. Super exciting time for all of us. And then I've got to move these construction crews out into the field. We just got our one of our variance hearings. We got approved last night for small apartments, so I got to jump on that. We've bought so much property in September that we're going to be full steam ahead for the next 60 days, really focusing on the renovations and the stabilization of our properties. You know, by the end of October, we'll have almost 300 doors. And by the end of the year, we want at least 200 of those cash flowing, if not more. So we have some work to do, which means we've timed out a little bit on the daily active hunting for properties. Again, if a deal falls into our lap like the one that came in this week on the self-storage, I mean, we're not going to pass up a sweetheart deal. But Jason's actual getting down every day, once a week, doing a big push, looking through everything, making phone calls. We've timed out internally for that, so you get to work with them externally. Now, I'm going to tell you this is for mastermind members only, as you might expect. We really work with our mastermind folks, and then you'll be able to see that. It's 6 weeks of property hunting. It's a Tuesday, 3:30. It's probably about 90 minutes of it. It'll be in person as well as online. We've got big enough rooms up here. We can social distance. We can check your body temperature when you walk in. We can make you wear masks. We can do all the protocols that we can put a few people in a room and feel safe. So they'll be in person or online. You'll need to be pre-qualified if you're joining our mastermind. Part of it is to figure out at what level of credit worthiness are you, what can we start taking down, and that will dictate the stuff we hunt. And our target is always 15% cash on cash with the property that has equity already in it when you're buying it. So if you're thinking about joining the mastermind and you haven't, now is the time. We're going to just open it wide open. I'll just go through the cost. You should all know the cost. It should not be a secret. It's $10,000 year one, $7,500 for year two, $5,000 year three, $2,500 for year four, free thereafter. Now, we've got about a handful of you guys, 3 to 5 of you guys that have been corresponding with us in the last 2 weeks about coming in. Once Jason's done with the 6 weeks, we'll be back to buying mode internally for small apartments and outside of this market, outside of the marketplace. And that offer for that 6 weeks is for the existing mastermind, new mastermind members only. So give us a shout at 281-401-9008, text join. And requirements are you got to make 6 figures, have a 700 FICO, you got to have capital to deploy. But starting September 28th, 29th, you'll be able to sit down with Jason and start finding properties. Start making offers. We can make 5 to 10 offers in the first 6 weeks. You should get 2 to 3 deals. You're going to be a good fit if you want to be those that are actually doing it. I mean, this is actually join a mastermind, and for 6 weeks we're buying property, right? So I'm not sure how much more doing we actually have to do to prove that we kind of know our stuff and do our stuff, right? So you can sit down with us. We're actually doing it. We'll build out your plan. We want to rush to get you as many properties in that first year as possible. We'll be doing that. You'll have access to our building, be a part of our community. You guys are welcome up here. Mastermind members are welcome anytime. We've set up some open offices for those guys to work in. We're very protective of our group. We don't like charlatans peddling stuff. And this year, our max membership is going to be 50. So we'd like to get there sooner than later. When we make mistakes, we have to pivot. We're pretty open about it, explaining to our mastermind members, don't do this, stop. Don't do any more. Like, one thing we learned about series LLCs and local banks, they don't work. So what we started recommending internally, and I'm going to do a Patreon. I'll do a Patreon video on the LLC setup in the best way, and we'll talk about the best use of a series LLC and where not to use it. But we admit it. Our mastermind members know, hey, Robert, Jason say don't do this because they got burnt on it, so we do it. We don't have any of this seniority nonsense. You can only invest with this person or that person. I don't know if that's even legal, but we don't do it. We just want to get you guys really successful. So if you're interested in a mastermind, 281-401-9008. Lastly, if you're a private lender or a passive investor, we have our platform. We have our syndication up on the platform. Our 506C. If you don't have access to this, you want to work with us as an investor, make sure you reach out to Brian, 281-401-9008. Just text invest, and we'll get you started. And he's going to send out another email blast. He's going to do some pre-qualifications. We're going to make sure we can get you in, and then take a look at it. We're pretty excited. Everyone who's seen our new platforms, very excited. Lots of opportunities, lots of choices, and with lots of information prepared for you guys. So, all right, that's it. So join a mastermind, work with Jason for 6 weeks, finding your first few doors. Talk to Brian about getting access to the new platform. And Jason, I know we've got some super exciting stuff today. So if you want to bring your screen online, I'll move you over.
Okay.
And again, you can go ahead and let us know. You can go ahead and tell us.
All right, can you see me? Is my screen share up?
Yep.
All right, hold on 1 second here. All right, everybody can see my screen. I'm going to save the best for last.
Great.
Because that's what a good salesman does. But this is a huge See I Told You So that started in December of 2018. And the things we were doing back in 2018, I got in just absolute arguments with people. And look, I understand if people don't agree with me, that's fine. But give me some data that says you don't agree with me. I'm totally okay with that. Then we can have a debate about the data. Your gut feeling is not a good way to invest. Now, don't get me wrong. If you're looking at something, the numbers are kind of close, and your gut tells you no, then don't do it. But when the numbers are bright green, it says go, 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 then you need to go. That gut feeling, if you get a gut feeling that something doesn't feel right, it's probably fear. Most folks don't know how to differentiate between the two. But today, I've got a huge See I Told You So. But let's talk about some of the news here that's going to affect real estate. Let the exodus begin. New Jersey raises taxes on millionaires. So New Jersey is hell-bent in destroying its own state. So let me show you what this map is. The darker green a state is, the higher the credit rating is for their bonds. Another way to say this is the darker green a state is, the more financially healthy it is with regards to the secondary marketplace. In other words, investors buying bonds want a deeper, darker green because it is less risky. So I can tell you right now, anything that is not green, I would not invest in those states. California, Alaska, Louisiana, Kentucky, Pennsylvania. I would not touch any of those states. Add in the red and the orange states, Illinois, New Jersey, and Connecticut. I wouldn't invest a single penny in those states. Why? Because they're beyond broke. In fact, the lowest rating, when you start to get out into this dark red, that's almost considered a junk bond, meaning it's super high risk. Do not invest in these states. How many people, Rob, are running around selling real estate packages to go invest in Illinois? I'm like, why would you invest in that state? It's broke. And real estate investors will say, well, Jason, I mean, it's the state that's broke, not like, not like my real estate. And I'm like, dude, you don't understand.
Yeah.
This is what happens.
Where are they going for the money?
Right. When the state is broke, they come after the millionaires. But then they'll say, well, Jason, but I don't live in New Jersey. And I'm like, no, but your real estate does, and you can't move your real estate unless you sell it. Which, right. Rob, what are you doing with all of your properties in New Jersey right now?
Oh, I'm dumping them. They're all on the market. The market is at peak. I'm getting out. I'm pulling out, I don't know, about $2 million worth of property. I'm exiting New Jersey.
The only thing that's saving New Jersey right now is the fact that New York sucks more. That's true, right? I mean, it's just
New York City, yes.
New York City. Yeah, New York City sucks more. That's the only reason. So I'll tell you right now, anything that's colored yellow to red, you do not invest in those states. I would make the argument that I want to invest in states that are AAA rated.
Only.
Those are the best states. They're the most financially healthy. Oh, what a shocker. Texas is one of those states. Oh, you mean this whole y'all's legislature moves real slow and you only meet every other year and you're not as progressive? Yeah, but we're not broke. And that's good. That's a good thing. So these are the things I would look at first before I invest in these other states. Now, does that mean I shouldn't invest in Arizona or Nevada or Florida? No, it just means we need to do a little more inspection, a little more due diligence. I'd invest in Arkansas. I really like Little Rock. But these in the dark green, at least at first brush, are pretty good states to invest in. Atlanta, and what's interesting here with Georgia, Atlanta is almost like Houston, very similar to Houston. Tampa, Orlando, very similar to Houston, very similar marketplace. I would invest in Hawaii. I got a couple of buddies that flip houses there. That's a whole different monster. He actually flies in his crews from Southern California to Hawaii to do rehabs on his houses. It's just not something most investors can do. But these are all pretty decent little states. This one, Texas being the best simply because of appreciation. So be very careful with this. If a state is broke, they're going to come after the real estate investors because you can't move.
Now, I will say this, because I still can. That's where I was born, right? Born and raised in New Jersey.
Right.
I do consider myself a Texan because I complain about 30 minutes of traffic, so I'm officially a Texan. But if you guys are leaving New Jersey and coming to Texas, I did find the only good bagel place in the entire state. So hit me up, 281-401-9008. I know the best bagels place in the entire state of Texas. So I just want to make that announcement for anyone coming down from the Northeast.
Well, let me just say this: the people in these states are not bad people. I mean,
there's a lot of conservative states on there, right? West Virginia.
These places are great. You and I, Rob, are gonna. Well, Rob, you're gonna be here. I'm gonna be down here. Yeah. I'm gonna have a place in Coronado.
All right.
But my net worth is not wrapped up in all of this nonsense.
No. It's Texas.
No way. Just be aware. Looking at the state credit rating is going to be critical going forward as these pension fund liabilities begin to mount in these states. In other words,
that is the big thing in New Jersey. They have to get rid of the pensions. They have to get rid of the pensions.
The pensions are going to break the back of these states.
Yeah, that's what's happening.
Now, I will tell you this. Just because these states are green doesn't mean you should go run off and invest in them. I ain't invested in Michigan right now. There's no way. I'm not touching this thing with a 10-foot pole.
Yeah, I'm not doing Ohio either, right? I'm not going to South.
No way. These two states,
Yeah.
Indiana ain't happening.
Yeah, no.
No way. Mm-mm. Now, could I do Oklahoma? Possibly. Maybe. Arkansas? Yeah. Could I do Florida? Absolutely. I like Arizona.
Mm-hmm.
Colorado's great if you can find some great deals. I think Utah is just too big.
And I wouldn't go any further north than that. Yeah, I wouldn't go any further north than that line right there.
I wouldn't either. I love these two states. I absolutely love Washington, but there's no way I'm going to put $1 of my money in there.
Yep.
So just be aware that this is one of the things I like to look at when Rob and I start having conversations about, hey, when we get done in Texas, where are we going next? And I actually think it's going to be one of these two right here. So South Carolina, North Carolina, maybe Tennessee. When we're done with Texas in 5 to 7 years, we might be doing some of the stuff over here. But in any case, this is something you need to be aware of. Why? Because you don't want to be this guy. Last guy left in California gets stuck paying a $140 billion tax bill. This is from Babylon Beat. This is not a real article. It's satire. It's fake news. But it's hilarious because it's true. With high taxes, low electricity, and everything on fire, people continue to leave California. One man, Warren Stanley, was determined to stay. I just enjoyed the climate, he explained. But he got a surprise this morning when he received a tax bill in the mail for $140 billion. As the last person remaining in California, stated the letter from the California governor, Gavin Newsom, who now works remotely from income tax-free Florida, you're going to have to pay all the taxes. Thanks for choosing our great state. Oh, man, Stanley whined. I knew I hadn't seen my neighbors in a while, but I didn't think I was the last. Stanley's currently working on negotiating some sort of payment plan. His main question was whether if he paid taxes, the state would be able to keep the electricity on continuously. But the answer he got was probably not. This is so funny because it's true. Everybody's moving out of California. They're moving out of a couple of states because the state's on fire. My brother's in town this weekend, and he said the entire state of Washington's on fire. It's crazy. It's absolutely bananas. So in any case, a little tongue-in-cheek. Rod, this is going to be the theme for the rest of the market update. This is probably one of the most important market updates we've done in months. And I'm going to show you, this is all news from the last couple of days. California area realtors on California, August housing, sales up 15%, active listings down 50%, sales to date down 7%, appreciation, massive appreciation coming to that California market. In July, they were up 15% from a year ago.
Wow.
With 50% drop in supply of houses on the marketplace. Rapid inflation, appreciation. Crazy amount of appreciation. Housing market, white hot after Labor Day. Home prices up 13%, pending sales up 7%. Prices up 13%. This is Redfin, by the way.
So, I've got 1, 2, 3. You and I, Jason, and my personal stuff got about 6 properties on the market.
Yeah.
And we have 2 where the agents are coming back and saying, hey, it's time for a price reduction. And we've said, let's just wait 2 more weeks.
Yeah.
As that supply keeps going down and down and down, someone is the people that need to move are going to buy our houses.
Yes.
So we're not super quick anymore to start dropping the prices like it was pre-COVID.
Yeah,
right?
absolutely.
Guys, you should be aware of that and analyze the market and just, hey, how many houses are really on the market? And, I'm okay staying out here for another 2 weeks before I do a $17,000 reduction.
Yeah, there was a really, I'll see if I can find it. There was another interesting article over at Redfin, and they basically said, here are the 5 ways you can negotiate a house purchase, and none of them included negotiating on price because it's just not going to happen.
Yep.
House prices rose 11%, biggest gain in 6 years.
Wow.
Ridiculous. Home prices up 13%, biggest increase since 2013. It's just bananas.
Go back to what's going on with the black folk. What's going on with?
I don't know. I haven't read the whole article. I'm always real. Black home buyers face steeper price increases, sharper declines in homes for sale.
Oh, because of the lower. Yeah.
I always take these kind of articles with a grain of salt because I want to see the underlying data.
Right.
Let me look through here real quick.
And I always hate when they use black and white. I mean, I'd rather have their social economic class, right? Where are they at with income?
Yeah,
right?
I don't think race matters anymore.
Yeah, I don't. It's nonsense. So
just a little FYI for those who are from out of state, or like Texas, man. Texas full of all those white folks down there. I'm like, Like we have the most diverse county in the United States is in Houston.
Sure.
And it's not just white folks and black folks. It's Indian, Asian, like everybody. That's why all our restaurants are so damn good here because we have so many different types of people. I mean, it's like you could travel around the world in a week in Houston just going from restaurant to restaurant, like real authentic, legit places, not just like, an Indian place just because it has curry, it's Indian. Like real legit ethnic food, and it's fantastic. I've not gone through this article, so I couldn't.
All right, I'll check it out. I'm always interested when they throw in race.
I am interested in the socioeconomic, but I just, like I said, I didn't get a chance to kind of analyze it. So I want to reiterate this. We've had banker meetings all week, and I keep telling folks this is the most important sentence in the HAR report in the last year. The average sale price rose 10.2%, and the median sales price jumped 11% to 260. Let me explain what median means. In fact, let me do this so you guys can read it too. Oops. Let's type in what median means. Median is the middle number in a sorted ascending or descending list of numbers and can be more descriptive of that data set than the average. That's true. So let me share with you guys what median means. This is what median means. The middle number in a data set, the middle number here is 6. Now, if you've got an even number of numbers, you actually take the average of the two, so the median is 4.5. What this means is half the numbers are below 6 and half the numbers are above 6. In the median in a data set like this, half the numbers are below 4.5, half of them are above 4.5. What does that mean? A median sales price jump of 10.6 means half of the appreciation is below 10.6, half is above 10.6. 50% of this market is appreciating faster than 11%.
Hey, go back to the median screen, Jason.
Do what?
Go back to the median definition.
Okay.
It's all the way to the right, I believe, yeah. So that tap number, if you did the average there is 5.25, not 6.
Right. So the average is 5.25. The median is 6.
Yeah. So you can see the difference.
So in fact, with the average, what it means now, let's talk about the relationship between average and median. If the average is lower than the median, that means that you could make an argument that that data is trending lower given a certain time period. In fact, if these were associated with time period, then I could tell you which way the data is going. Let me show you this. This relationship here is very important. I don't know why HAR doesn't spend the time explaining this, but as our average price increases and our median increases, if the rate of rise is the same between the two, the median is chasing the average. This is why I keep telling people, do not be surprised if our median home price in under a year is $335,000. In fact, one could draw, you have to do a little bit of math, compare these two trend lines and draw another line back. And you could figure out in how many months will the median meet the average. I don't want to get into all that math because it just confuses everybody and it's not really important. It's not germane to the conversation. What is this right here. The median sales price jumped 10.6. That means half of the appreciation is above 11%. So let's talk about the see I told you so. The arguments I've been having for almost 2 years. This right here.
Yeah.
This is the Corpus Christi housing report. I bet most people didn't know this. The median price in Corpus Christi is $233,000. $233,000. What is it in Houston?
260 something.
269. So when people talk about Corpus Christi, they think it's this little podunk, know-nothing little town. I'm like, no, dude, you don't understand. It's a small market, but that is definitely not the case. In fact, they are up 17% year over year. That's like Southern California appreciation. And Rob, you and I love this. I wish HAR would do this. This is the price distribution. 6% of the properties that were on the market were $100,000 and less. 30% were 100 to 200. 37% were 2 to 300. What is this?
We have about 40% of our portfolio in that market.
Yeah, and actually, hell, Rob, all of them are below 100 grand.
Now, yeah, well, when we bought them, yeah.
So where are these houses going that were previously $100,000 or under? They're appreciating at 17% a year, so now they're worth 100 to 200, 200 to 299. A year from now, these houses here in the 2 to 299 are going to be 300 plus. You're going to see this bracket bulge. This is going to shrink. This is going to grow. This is going to explode. It's pulling up the bottom. That's why we keep telling everybody affordable housing is the place to be. That's where you're going to make piles and piles of cash. Let's go back to the number. 17%. 50% of the appreciation is above 17%. It's above 17%. We can go into submarkets. In fact, Rob, I had to look at it in some of our portfolio. Would not surprise me, just like we experienced in Surfside, 30% a year appreciation in some of these submarkets.
Absolutely.
And this is before this has gotten priced into the market. Active listings are down 40%. Closed sales are up 7%. That's a delta of 47%. You have a demand supply difference of 47%. That is not reflected in these numbers yet. That'll probably show up in the data in the next 6 or 7 months. Now, what's interesting is this. 2.6 months of inventory.
That's crazy, dude.
That is Southern California fast.
That is.
But look at this. As compared to 4.6 in August of 2019. And a percentage basis, that's 50%. It's crazy. Absolutely crazy. That market is ready to absolutely explode. You've got a couple of months to really grow. We have a syndication in this submarket, and we can see it on the rent side. Rents have exploded in the last year.
Yep.
And it's only going to get worse because as this number increases, I guarantee you the median home income is not keeping pace with this. So you're going to see an explosion in leases.
Again, I'll tell the folks that everyone in our mastermind has had an eye on Corpus Christi since we started. A lot of guys have deployed capital down there, whether it's in the syndication, apartments, Airbnbs, or just duplexes and triplexes. Those guys got a real good head start a year ago. We still love this marketplace. Almost everything we're closing in the month of October is going to be in Corpus Christi. So again,
let me put some dollars to cents here. 16.5% appreciation times 233 means that this year, if you bought a house for $233,000, it appreciated $38,445. It appreciated 38 grand in a year.
Yeah, so for us, I mean, I'm looking at there's a single family we bought for 110. Right, we put our stuff in. We got the exit appraisal about a year ago, 145. We were happy with it, and that's up 17%. So 145 times 17%. To get that number, and here's so it's up $24,000. I think we brought less than that to the table to close. So in actual cash in equity, it's 100% growth. We put 24 in, we put 20 something in, and it appraised 20, and there's $28,000 of equity in there now. Now we've got $50,000 worth of equity. Half we paid in, and half appreciated in the marketplace. We are absolutely loving that market.
There are only 56 houses in Corpus under 100 grand.
Yep.
That's insane. 8 days, 6 days, 23 hours, 2 days, 4 days. I bet all these get snapped up. I mean, that's a big giant piece of junk. But this market is gone absolutely bananas. And it's not going to get any easier. Rob, I think that's all I got. Let me switch over here. Uh-oh. My laptop freeze up.
No, you're good.
I sent an email to the guys at the Apple store and said, hey, it's about time, boys. JB needs an upgrade. This thing is running way too – I love it. It's 7 years old, but time to upgrade.
All right, guys. Yeah, again, you see what we're looking at. We see the stuff we're hunting down. If you want to be part of the mastermind, let me know. There's 2 people right now who are texting me back and forth on getting into the mastermind. I think there's a couple more of you guys that have considered it. There's no better time than right now. And you can bet your bottom dollar we'll be looking at Corpus Christi when Jason starts his property hunt. So let us know. I texted you. We got the intake form on the website, all that good stuff. We don't need to talk about it anymore. Thanks a lot, guys. We appreciate your support. We appreciate you watching. And we're going to keep on doing this. So have an excellent, excellent weekend. Goodbye, everyone.